Understand Bitcoin, you really have to think about money. And you have to think about what is money, not just...
The world is changing fast. Digital currencies are replacing cash. And if you're not paying attention, you could be left behind. Central banks are adapting, and you don't want to miss out on how this revolution could impact your money. Stay ahead of the curve or risk being a step too late. Global shift towards digital monetary systems. The world is witnessing a significant transformation in how we think about money. Central banks, which traditionally manage physical currencies like the dollar, euro, and yen, are now adapting to a world where digital currencies are becoming the norm. As of 2025, over 90% of the world's central banks are exploring or have already begun developing Central Bank Digital Currencies, CBDCs. This shift is not just about convenience. It's about securing financial systems in an increasingly digital world. Countries like China have been leading the charge with their digital yuan, which has already been tested in several major cities. Other countries, such as Sweden, are following suit with their own digital currencies, and the European Central Bank has hinted at the possibility of launching a digital euro by 2026. But why the rush? Traditional banking systems are slow, costly, and vulnerable to fraud. Digital currencies offer a way to speed up transactions, reduce costs, and provide a more secure means of transferring money. They can also make financial systems more inclusive, providing access to banking services for the unbanked in regions with poor infrastructure. The central banks are not only adapting to these changes, but are shaping the future of global finance. The road ahead for CBDCs will be full of challenges, but it seems clear that digital currencies are here to stay. In the coming years, we could see the rise of a completely digital financial world where traditional money becomes a thing of the past. Legal frameworks governing CBDCs. As digital currencies take center stage, the need for solid legal frameworks to support central bank digital currencies, CBDCs, has become more crucial than ever. The development of CBDCs is not just a technological shift. It also requires the creation of new laws and regulations to ensure their legitimacy, security, and integration into the global financial system. Countries like China and the Eurozone are already tackling the legal challenges posed by CBDCs. In 2025, the People's Bank of China began implementing laws specific to its digital yuan, addressing concerns such as privacy, user rights, and financial stability. Meanwhile, the European Central Bank is working on draft regulations that would govern a potential digital euro, with a focus on consumer protection and compliance with the General Data Protection Regulation, GDPR. For many nations, the task of integrating CBDCs involves balancing innovation with security. Legal frameworks must ensure that digital currencies cannot be easily manipulated or used for illegal activities, such as money laundering or fraud. At the same time, they need to protect consumers' privacy and financial rights. As more countries work toward creating these digital currencies, the legal landscape will continue to evolve. The goal is clear: to create a secure, transparent, and efficient financial system that can thrive in the digital age, ensuring that both consumers and economies benefit from this revolutionary shift. Cross-border payment solutions. The rise of central bank digital currencies, CBDCs, has opened the door for improved cross-border payment solutions, with one of the most exciting projects being mBridge. Launched in 2020, mBridge is a collaborative initiative between the Hong Kong Monetary Authority, HKMA, the Bank of Thailand, and the People's Bank of China, among others. This project aims to use CBDCs to streamline cross-border payments, reduce transaction costs, and speed up processing times. As of 2024, the project has successfully tested real-time international payments, paving the way for a more efficient global financial system. The role of mBridge. As global trade continues to grow, one of the most pressing issues is the high cost and slow speed of cross-border payments. Traditional international money transfers often involve multiple intermediaries, resulting in delays and costly fees. In response, central banks are exploring new solutions like mBridge, a groundbreaking initiative designed to facilitate seamless cross-border transactions using Central Bank Digital Currencies, CBDCs. Launched in 2023 by a collaboration of the Hong Kong Monetary Authority, Bank of Thailand, and the Central Bank of the United Arab Emirates, mBridge aims to simplify cross-border payments by using multiple CBDCs to settle transactions directly between countries. This approach eliminates the need for intermediaries, reducing both the time and cost of international transfers. The success of mBridge could revolutionize global payments. By allowing banks in different countries to use CBDCs for direct exchanges, mBridge promises to make international trade and remittances faster, cheaper, and more transparent. For example, the time it takes to transfer money from one country to another could shrink from several days to just a few seconds, offering businesses and consumers more flexibility and cost savings. However, for mBridge and similar initiatives to succeed on a global scale, cooperation between countries and central banks will be essential. Ensuring interoperability and establishing standardized regulations for CBDCs will be key to making cross-border payment systems like mBridge a global norm. As more countries join these efforts, the future of international payments may become more efficient and inclusive, ultimately reshaping how we conduct cross-border trade and finance. Sweden's approach to a cashless society. Sweden has long been at the forefront of the global movement toward a cashless society, and its exploration of central bank digital currencies, CBDCs, is now a case study for other nations considering similar transitions. The Swedish government and Sveriges Riksbank, the country's central bank, have been researching and testing digital currencies for years, with a focus on how CBDCs could fit into the country's already largely cashless economy. Sweden is one of the few countries where cash usage has dropped dramatically. In 2023, less than 1% of all payments in Sweden were made with cash, making it one of the world's leading cashless societies. With this backdrop, the Swedish Central Bank launched its e-krona project in 2017, exploring the potential benefits and challenges of a digital version of the Swedish krona. The e-krona aims to provide an alternative to both physical cash and digital payment systems like Swish, which dominates the Swedish market for person-to-person transactions. The e-krona is particularly focused on ensuring that digital currency remains a public option, not controlled by private companies, to maintain the public's trust in the financial system. The trial stages have focused on testing the e-krona's technical feasibility, privacy safeguards, and user experience. Sweden's pioneering efforts highlight several lessons for other nations. The importance of financial inclusion, ensuring everyone has access to digital payments, is critical. Additionally, Sweden's focus on creating a digital currency that complements its existing financial infrastructure without replacing traditional banking systems sets an important precedent for other countries. As the Swedish government continues to test and refine the e-krona, its success or failure will significantly influence the global conversation around CBDCs and their potential to reshape the future of money. Will CBDCs replace traditional money? The rise of central bank digital currencies, CBDCs, has sparked debates about the future of money. As of 2025, several countries, including China and Sweden, are actively exploring or testing their own digital currencies. With Sweden aiming for a cashless society by 2030, the question remains, will CBDCs eventually replace traditional money? Many experts believe CBDCs could revolutionize payment systems, making transactions faster and cheaper. However, challenges like privacy concerns and technological hurdles must be addressed. The future of money is uncertain, but CBDCs might just be a glimpse into a digital-first financial world. Don't miss out on the next big thing. In our upcoming video, we dive into the economics of climate change. Can we afford to wait? You won't want to miss it. Make sure to hit that subscribe button and turn on notifications to stay in the know, because the future waits for no one.